stocks or when you're doing bonds. And of course, structure. Real estate are usually handled on individual basis, except when you're talking of investing in real estate vehicles, some of which I will also discuss in the course of this presentation. Now, in terms of standardized performance information, it is difficult. You know, if you want to know how the stock market is performing today, all you need to do is to open business day, you know. But for real estate, there's no venue, you know, although now Redland is developing something to get performance indicators of how on a comparative basis all over the place. Entrepreneurial potential. If you're a real estate investor, you cannot be passive, you know, unless you invest in vehicles. If you're going to be a successful player, you have to become a real estate entrepreneur. It's as simple as that. Of course, there is a sense of security and a sense of pride, which comes, I mean, no matter the volume of stocks you own in the stock exchange, you know, in this part of the world, it doesn't drive that sense of pride as to compared to when you own property and people know and they can associate you with this property or that property. So what are the benefits of real estate investments? You know, I'll look at that very quickly. Number one, there's scope for capital appreciation. The reality of the matter is that, you know, when people argue about real estate, you know, they focus only on the yield. And I always tell them that real estate is supposed to be a total gain investment. You focus on the yield, you also focus on capital appreciation. And if you choose your investment right, and you choose the right location, you know, whether there's inflation or whether the macro indices, the economic change, your real estate value will move proportionately, if not higher. And by the time you aggregate your yield and your capital appreciation, you're always better off. So there's always scope for capital appreciation. And I always advise, you have to choose a location that will enhance capital appreciation for you. Income stream, I mean, if you're looking for an investment that in your old age, you know, you just sit down and you get stream of income, it is real estate. Self-occupation, real estate can serve dual purpose. You know, you can acquire for self-occupation today and turn to investment tomorrow. Or you can do for investment today and turn to self-occupation tomorrow, you know, depending on how you want to do it. Of course, leverage and tax shelter, which I'm going to mention later in this presentation. Now, why not real estate? What are the disadvantages? What are the demerits? And I call that why not real estate investment, because it's important for us to also mention that. Of course, I already mentioned high initial investment cost. Usually for most people, real estate investment is the single largest investment they will make in their lifetime that they will ever undertake. So it's not as if you're buying stuff 50,000, 100,000, you know. That is why I always advise people, you can't just take real estate decisions the way you take other investment decisions. You have to be deliberate, you have to be logical, you have to be sequential, you have to be strategic in your choice of your real estate assets. Of course, legal issues, a lot of legal complications go with real estate, you know, but with the right sort of advice, you know, I'm sure you can meander through that. High cost of maintenance, service charge for common facilities is always a problem. You know, why do people try to build only G+3? It is because they don't want to put lifts in the building. You know, people always ask, why do you do? Because once you do G+4 and above, statutorily, you are obliged to put a lift in the building, and that compounds the maintenance cost. And if you look at the class of those who will live in the building, if they are not those who will be able to afford that, it's better that you just do G+3 and you make on. The debt, additional expenses, I really need to move on. But all these are in the presentation, which I'm going to leave with Touchstone for us. Now, what are the golden rules of real estate investment? You know, I just need to focus on this. Then I will go to the impact of the pandemic, you know, then I will look at the opportunities in 2020 and beyond. I'd like to tell us in this gathering today that you need to follow this rule. Number one, you must choose the right location. Choose the right location. People don't understand that once you discount the value of land, the cost of construction is the same. So if you go to Akute to go and build a mansion, You cannot realize value higher than that particular location. You know, I was advising a professional institute last year. They're trying to do a secretariat somewhere in Alausa. And I told them that if you build this, what you're trying to build, this gigantic building, if you build, when you finish, the maximum you will get as rent is between 50 and 70,000 naira per square meter. You will struggle to even get 50 to 70,000 naira. But if you build the same building in Lekki Phase 1 Lekki Phase 1, you're getting 120, 150,000. If you go a bit further, you build, you're getting 200,000 naira. I mean, it's a no-brainer, you know. So your location is very important. You have to choose the right location. And that is why we say in real estate, location, location, location. Always, my mantra is that the first three factors we take into account is location. Every other thing comes after: quality, pricing, everything else. They come after location. But it is location that will. I already spoke to your return. You're focusing on equity, not ego, not emotion. You have to obtain the right title. You know, there are three things you must do when you buy land. And you know, a lot of us, you know, we spend so much money acquiring land, acquiring houses, but we don't want to spend another 5 to 10% to perfect our title. You know, you have to perfect your title. You have to take, when you buy land, I tell people, you must take possession. Possession is under the common law, possession is 9/10 of the law, it's 9/10 of ownership. So don't just buy land somewhere in Lekki and you think the land is there, you know. And I always advise people, when there's dispute over your land, you know, don't ever be the plaintiff. Don't be the one that will be fighting from outside the fence. Whatever it takes, secure your possession. Let the other party go to court. Make sure you are the one on the land. And once you have perfected your title, you know, it puts you in good stead. And of course, compliance. You can see what is happening in Lagos now with all the strict enforcement of the rules of compliance by LAPSCA, by Lagos State Physical Plan Authority, by Lagos State Safety Commission. You know, you don't want to take the risk. You know, I have a very simple principle in my real estate business. I will not till the ground unless I have all my documentation, whether I'm building personally or I'm building for my company. Now, play to win. I really need to move very quickly now. The first thing I did here is to look at the impact of COVID-19 on real estate. You know, this is in the presentation, so I'm just going to leave that. What the category analysis? I did the category analysis. What has been the impact on luxury segment, on classic segment, on hospitality and retail? I will leave that. No, I'm going to speak to commercial segment because there's a whole lot of you in the market now. You know, today we have oversupply of grade, even before COVID. Between 2017 and 2019, over 80,000 square meters were delivered. You know, now this year, when Ms. Alakija delivers her own on Kingsway Road, that's 55,000 square meters, plus 2 or 3 other buildings. You're talking of over 150,000 square meters in a market that is not expanding. The market is contracting, you know. So recently, some 2 grade A buildings in Lagos, tenants have downsized. You know, I understand that in one building on Kingsway Road, one tenant surrendered like 60% of the space because most of their staff are working from home. You know, there's increased void, lower occupancy, and all those things. But there's very strong demand for industrial properties, you know, because of the surge of e-commerce. The guys selling online, they need to create hubs, you know, all over the place. You know, I sit as the chairman of a logistics company, and I know the level of demand for warehouses all over Lagos today. So that's the major area. And of course, healthcare segment is a no-brainer in that respect. Now, what are the opportunities? I have just like 3 slides, or 3 or 4 slides just to round up, you know. Now, the first thing I note here is that real estate cannot perform better than the economy because real estate thrives off the back of the macro fundamentals, interest rates, disposable income, pricing, all those variables. The same way they affect every segment is the same way they affect real estate, you know. But we are told that we are out of recession, Q4 2020. You know, although I read an analysis that we are out of, but that Nigeria is out of recession, but Nigerians are still in recession. But that's a different issue entirely. At the beginning of this year, in my business analysis, I said year 2021 is 2020 plus, particularly for real estate. You know, the regulation, the impact has been good. And because the yield on alternative instruments has fallen to ridiculous levels, this is the only time that in over 10, 15 years, that real estate really has a fighting chance. So if you have a project and you're able to deliver a yield of between 6 to 8%, you can compete. In 2016, 2017, nobody will listen to you because treasury bills were going for 17, 18% in the market. You know, so there are opportunities. In the residential segment, home ownership rate is still sub 25%. It means that there are still 75% people looking for homes. You know, so you have to choose the right segment in that category to play. If you have the money to play in the luxury segment, it's a fantastic segment. It is very resilient. The reason is simple. Those who play in that category, they are not price sensitive. They are buying second or third or fourth homes, or they are buying holiday homes. They already have their money, you know. But if you are playing the premium and classic segment, very competitive, very price sensitive. But there's very strong demand in the comfort category. And that's the category I have chosen to play. And that's the category of 20 million to 50 million. There's significant demand in that segment. I can tell you, one of my projects now, you know, I've sold 80% off plan, you know, and we are still like a year from completion. That is because, you know, we have chosen the right niche. We're building only studios, 1 bedrooms and 2 bedrooms, because we have targeted first-time home buyers, young families, and empty nesters, those who want to downsize. And that category is strongly recommended. I've already discussed commercial, heavily challenged. Retail is still struggling, you know, still struggling. My view is that maybe the demand for formal shopping, you know, is not as deep as we are taught in this country, you know. And also you see that whenever there is a small crisis, all these outlets, they are easy targets, like what happened at, I don't know, Robinsonia, at Novari, and all over the place, you know. But there's still high voids, there's still default, there's strong competition from online platforms, you know. A whole lot of people, you know, have moved to online platforms. Industrial and logistics, massive opportunities. Logistics hubs, data centers. You know, we say in real estate, you know, when people talk about blockchain, AI, cloud computing, we tell them that even the cloud lives on the ground in data centers. You know, so there's a massive opportunity for data centers. Recently, Rack Center just increased their investment by over $200 million, you know, and they're just building, they're ramping up capacity because there's significant demand in that segment. So what are the sweet spots, just for me to round up? What are those areas I can just look at very quickly? Number one, you can look at co-investing with people and joint ventures, you know. This is one area that people overlook, you know, but this is my business model. So today I look for landowners, I look for people with capital, I add my capital, I do my project, we share the risks, we share the returns, you know. This is one area, you know, so you don't necessarily have to start going into real estate on your own headlong, you know. You can look at those that you can partner with, you can co-invest with people, you know. This is one area that there are significant opportunities. There are opportunities in buying land and shops. You have to be, you know, I always tell people that there are 2 things Nigerians buy without thinking. They buy land and they buy shops. You know, they buy shops and say, my wife will need it in 5 years. My daughters may need it. My auntie may need it, you know. So there's a significant opportunity to choose the right location, you build the right size, the pricing is good, you build shops, is a no-brainer. Land, people always want to land bank. It's our nature to land bank, you know, so you can partner with people. I tell you, you have to understand what is the trajectory of real estate development in Lagos? Where's the next Baby Street? Where's the next Allen Avenue? Where's the next Akomojo Road? You have to understand. Look at what has happened on Monastery Road in Shogotedo in the past 34 years. You have to choose. You have to carefully understand the direction of infrastructure. What are people doing? When a big investor it's like stocks. When Warren Buffett makes significant investment, in a company, everybody goes to that place. So infrastructure drives real estate. So there are opportunities also in that segment. Last year, 2019, 2020, there were about 4 real estate nodes that were issued in this market. You could invest in real estate nodes. It's like you're investing in commercial papers. You could invest in vehicles, especially when you see that pension funds are going, because pension funds, they have the resources to have done a thorough investment analysis. When they are investing, you can also go and pitch your 10 there. I'm coming to digitization. There's a lot of opportunity in co-living and co-work. Today, if you look around you, you'll see that young men and young women in that category, they now rent a flat. So they rent a flat, they use the flat together, they divide it, and 4, 5, 6 of them, That shows that the mentality of, I want to own it on my own, the era of Mark Mansion. Number one trend on real estate development since 2011 is that the era of Mark Mansion is gone. But we still stuck to Mark Mansion in Nigeria, but that era is going. People now understand that the smaller, the better. People don't necessarily want to own today. They are interested in having access to use and what they want. So you could choose the right location. You could come together. It's a no-brainer. If you go to a Butete Yeba, you buy land, you buy 2 plots of land, 720, 620, 1,300 square meters. You're able to do 20 small units with a common area. I can tell you, you're going to be a winner. Whether you are selling, whether you are leasing, you're going to be a winner. There are opportunities for fractional titles, ownership. A whole lot of sophistication is coming into the market in Nigeria, and we need to pay attention. Now, finally, this is also the era of digitization, and with the rules on co-funding. I'm a strong apostle of real estate investment trust. So today, as I was talking to one big man earlier in the week, he has a property in the market he's been trying to sell, almost 2 billion. And I told him that you may not get somebody to put 2 billion down today, but we could create a vehicle, transfer this asset to this vehicle, unitize the capital value of the asset, and then you sell the units. And with digitization, you could tokenize those units. I am waiting to be the first to break that in this market. I'm working very hard, to pull together assets that have been part of a REIT before, but creating a proper digital equivalent of a physical asset. That is also going to be a winner, judging by the trajectory of what is happening in the market today. So in conclusion, I think that real estate is we're in a country where there are significant opportunities. And you want to ask yourself, what are people like Land Afrique, people like Cesso Global, what are they looking for in Nigeria? If there are no opportunities, what are they looking for? In spite of the challenges, you cannot get the kind of return. If you do a development here in this country today, you can still make 18, 20, 25% margin. If once you're able to survive, of course, you have to survive the process, So the opportunities are there. You just need to pick your investment rightly, choose your location carefully, follow the simple rules of investment. Make sure that you don't jump the gun. Make sure that you don't do things illegally. Don't cut corners, because if you cut corners, I was in Bagada earlier today, and come and see demolitions. Today, come and see demolitions. You don't want to put all your money, all your investment in an asset, and then the government comes one day, they say you didn't do the right thing, and then they come to demolish. So I hope with these few points of mine, I've been able to convince and not confuse you. And I think we need to pause here and take further questions and and further discussions. Thank you very much once again for having me, my brother. God bless you. But I'm still here for questions. God bless you.
Thank you very much. The CEO of Eximia Realty Co., Mr. Hakeem Ogunniran. This is, I didn't expect anything less. World-class presentation, knowledge that you can bank on. This has been a very exciting session. Now we have opportunities for interaction before we are going to do, Uche Nwosu, thank you very much. It's quite insightful, sir. Thank you very much. That's a great one. You can send your question into the chat room so that you can look at it, or your comment, or if you feel like intervening. I'm going to specially call on someone who I know, there are a couple of people who are here who have their backgrounds in real estate. And so I'm going to harass them, if you like. Mark Edowa Dagon. I'm sorry if I'm not pronouncing your name pretty very well. Thank you. This is an eye-opener. Mr. Ogunniran has done a great job, a balanced job in telling us the only estate that is real, like they would say in real estate, is real estate, and that location, and the opportunities. He has not just done a one-sided job. He has given us a balanced approach to all of this, where the sweet spots, that you need to understand, in spite of the challenges in the world in which we live, where there is a glut in the market, and that glut came even before we had COVID, and quite a lot of people have had to work from home. So, wow, this is from Abiodun Ugokanmi to everyone. Wow, thank you, sir. We want more. You're going to get more. You're certainly going to get more. Thank you very much. Uche Nwosu, please shed more light on the 2 billion naira property you said you digitalized. Thank you very much. So that's the first one. Then Adekunle Sembore is also, he said, can we please talk more on the digitization of assets? It is new. I can open another dimension in this sector. Also, can we please have the slides? Wonderful presentation. Thank you. And then the last one for now, from Barnabas Adedoyin. Thanks greatly, sir. The information you shared are timely. God bless you, sir. And the host, thank you very much, Barnabas Adedoyin. So can you please respond to these comments as well as questions before we go to other aspects? And then we are going to unveil an event that is coming shortly. Okay, let me keep quiet. Is that, the commercial is going to play, and we're going to talk about that. Okay, so Mr. Ogunniran, can you respond briefly to?
Okay, thank you very much. The other point I wanted to mention in my conclusion, which I forgot, is that in real estate, we always say, don't wait to buy real estate. Buy real estate and wait. I need you guys to take that away from me. Don't wait to buy real estate. You buy real estate and wait. You can ask those who bought Banana Island and wait. And waited. You can imagine the level of. Now, let me explain what I meant by digitalization. In my previous life, when I was CEO of UPDC, we floated a REIT in 2013. But we didn't create a digital equivalent. A REIT simply means that you put assets together in a vehicle. You unitize. So basically, we brought 5 assets together. Valued the assets, 32 billion, and we created units. We created 3 billion units at 10 naira, and you gave opportunity to anybody to buy in those assets. So people bought from all over the world. They bought. I had investors from all over the world. And when they bought, it means that you are now a proportionate owner to the extent of what you bought in those assets. Everybody is a part owner of those assets. That is what a REIT means. But today, with what has happened and what is happening in the digital ecosystem, you can now go a step further. So this 2 billion property that you are struggling to sell, right? You could go through the normal process of creating a vehicle. And the best part of it is that the Finance Act 2019 has solved most of the problems associated with this vehicle. Because now the Act has created those vehicles as a pass-through transparent vehicle. So you could just unitize your 2 billion. You can create 1 billion units as 2 naira, for example. And then you can create tokens of 2 naira, and float them digitally. And then people can subscribe. The benefit of that is that it gives you the liquidity. It provides a platform for liquidity. One of the disadvantages of real estate is it is always illiquid. When you want to sell, it takes time before you sell. But when you buy tokens of a digitized asset, it gives you that room for liquidity. And that is where the whole world is going. That's why the world is going, And I do think that with the new provisions of the Finance Act, it's now a lot better to take advantage of what is happening in that space, and take advantage and then do this for the future. This is an area that I'm so passionate about because I know that in this country we do real estate development very well. We do real estate management very well, but we don't do real estate investment. Whereas once we have created, even governments, once we have created assets, the first set of assets, you don't need to struggle to look for money to build other assets. You just need to unlock value in this, create cash flows, sell the cash flows now, and let those who need consistent cash flow, the pension funds, let them buy it of you, and then you take your capital, you go to other developments. That is the only way to grow this segment. And that is exactly what we need to do. Thank you, sir.
Thank you very much. Basi Ibiang is asking, thank you for the brilliant presentation. What's your advice for a salary earner who wants to play in the real estate market? And then there's Bayo. There is Uche Inwos is also thank you, Mr. Tunde Ojo. Uche, I'm most very grateful for your kind comment. The concept of location, and location is a great insight to me. Thank you, sir. That's from Bayo A. I don't know what the full A is. It's all about. So can you, can you speak to the need of a salary earner who wants to play in the real estate market?
Well, it depends on where you're earning your salary. If you are in Shell or you are in GCP, or depends on the salary, you're earning, But what I always advise is that people should start. There are avenues for cooperatives. One of the things that we also need to develop, when I retired and I started this business, I also launched a real estate cooperative. Do you know, sir, that in Kenya, for every 10 houses that are sold, between 8 and 9 are financed by cooperatives. They call them SACCOs. Cooperatives are bigger than the banks. They're bigger than the banks, in Kenya, Wow. So we also need to develop our cooperatives. So there are real estate cooperatives today that you can start and begin to build your capital. In fact, the good thing about it is that there are people, one of my friends in the market, let me help him to market, Didi Odusolu, Octo 5 Holdings. He has even launched an app. We have not launched an app. He has gone ahead of me, but I'm going to catch up with him very soon. He has launched an app that you can save, in bits over the period. We need to understand that we need to have the discipline of preparing to buy a home. And that discipline is to start saving towards building your 20 or 30%, Unfortunately, we still have not reached the level where you could buy a house with zero contribution. But today, if you have 30% of the house that you want to buy, there are opportunities for financing. We even arrange mortgages So we have alliance with 2 or 3 mortgage institutions, that once our customers are able to build their capital up to 30% of the value of what they want to buy, we help them to raise financing. So that's my advice with salary earner. Start small, start to build your capital and get to a level that you're in a position, to make that decision.
Thank you, Mr. Ogunniran. There's someone I will be very glad, and I think he has raised his hand. That's Mr. Kende Allowancing, who started his career as a real estate professional. Mr. Allowancing, can you unmute? And let's have the benefit of your experience in this particular area. I don't want to say a lot more that I know about his foray into this particular space. Mr. Kende Allowancing, please. Hello, is this still on the call, Mr. Allowancing? Hello. Mr. Allowancing? Yeah, it's still on the call, but I think he needs to. We need to unmute. Can you unmute yourself? Is it? Can you unmute yourself?
Good afternoon.
Thank you.
Good afternoon. Actually, it was a Touchstone. The Touchstone gatekeepers that have kept me from unmuting. Actually,
we're sorry. It wasn't deliberate.
Mr. Ogunniran, thank you very much for your very highly enlightening presentation. I mean, we really do not expect anything less for somebody who has been the managing director of UPDC. We are front runners in real estate. There are 2-3 questions I have, Mr. Ogunniran. Somebody talked about a glut. In the course of your presentation, somebody talked about a glut. If you go to some key areas in Lagos, you see vacancy boards, suggesting that there is a glut. In some other environment, there is automatic adjustment. That's what they call adjustment. But in Nigeria, you don't see such adjustments because most of the investment in real estate are equity investment. People save a lot of money to invest. People collect a lot of bribe to invest. They do all kinds of things so that if the properties were leveraged, in other words, if they borrowed money to invest in such properties, when there is a drop in price, rather than allow gluts, they will adjust their rents. They will take lower rents to ensure that the properties are occupied. But that does not happen in Nigeria. So how does an investor in real estate, how does he expect a very good return in an environment where there usually the problem of a glut? That is number one. The second question I have is on mortgages. On mortgages, I used to be a banker myself, and I know that one of the key problem with lending to real estate is the problem of realizing in the event of default. When a mortgagor, when he defaults in honoring his obligation, and the bank now takes the mortgagor to court, even where there's a legal mortgage already registered on that property, the law expects the banks to take such people to court to get the court to make a pronouncement before they can realize the mortgage. And given that in Nigeria there is no freehold, everybody holds interest in property at the, I don't want to use the word discretion, at the mercy, at the grace of the governor of the state. So what we all likely have, except very few people, except very few people freeholds in perhaps Ikoyi area, what we all have is a leasehold interest that is issued us through governors of the states. I mean, based on the land use Land Use Act. Now, so banks are not particularly very excited or interested in lending to real estate because of the problem of realizing. So what would you advise, financial institutions, who are all in the glut now? They have excellent liquidity. Interest rates have crashed all over the place. This is the best time for you to access real estate funds, but they are unwilling to expose themselves to real estate because of the problem of realizing. What would you advise as a way forward, either to government or even to banks themselves, as the easiest way to realize? Then you talked about digitalization, and COVID has done one thing. It has made unnecessary a lot of investment in commercial real estate, particularly office spaces. How would we convert a lot of the office spaces that we have in central Lagos, in Lekki, office spaces, purpose-built office spaces? How do we convert those ones to residential, where the demands are, since there's going to be some contraction in demand in office spaces because of the experience of technology through COVID? Thank you very much.
Thank you very much, Mr. Lansing, for your highly informed intervention. I'm sure.
For the A-level questions. For the A-level questions. Okay.
Thank you.
I'll start with the first question. That when there's a glut, that there is no automatic adjustment, and that people don't reduce their rent, I think that in practice, I've had an experience before where, and I agree with you, the reason is because a lot of the capital that you find in real estate, they are not risk capital. And because they are not risk capital, people are not bothered, But I also think because a lot of the money has gone into buying land, for the capital invested in land, usually it's equity. You don't borrow to buy land. That's why you find that in Nigeria, price of land will be going up, even though price of houses are not going up. But I think that when the push comes to the shove, people do take significant business decisions. I have had to reduce the rent on a property by almost 40% before, because we had an asset, 44 flats, we had a single tenant, the tenant left, they paid for renovation, we renovated. For 1 year, we didn't get another tenant, And then we had a tenant who says, I will do this, this is the price I'm going to pay, We had to take a business decision, particularly because the tenant was not paying for like 4 or 5 years in advance again, So I think it does happen. But because there's no, and I agree with you, because the volume of debt in the real estate segment is small compared to the size of the market. That is why people are able to sit still, But I do think that the adjustments will happen. The circumstances will foist that system on people. In the past 6 months, there are 2 major buildings in Lagos. I don't want to mention their name. There's one in VI that the single tenant has surrendered like 60% of the space. Because, hey, my people are working from home, So what do you do with the remaining, what do you do with the space in your hand as a landlord? There's a property on Kingsway Road, a great property. They're one of the tenants. I understand that surrendered like 50% of the space as well, So when you begin to bear the cost of service charge yourself as a landlord, there's so much for how long that you can bear the cost of service charge yourself and keep the space unoccupied. You have to take that decision. And I think that's what is going to happen in this market also. On mortgages, we started mortgages wrongly because legally, under the common law, what the law says is that the mortgagee has the power to foreclose before the ink is dry. That was the law. That you can foreclose. In other words, as you sign the mortgage paper, that's what common law said. And before the ink is dry, the mortgage has power of foreclosure. But there's been a lot of issues with the legal system all over the years. However, in the past 3 to 4 years, there has been major reforms in that segment. With the new standard foreclosure laws, which is now being replicated in most of the states, So just like you have with the tenancy law in Lagos now, if you dispute your debt, they will tell you, first of all, okay, go and pay the debt first. Let's not continue with the case. So I think when we begin to, and I think, I can't remember now, I think the foreclosure laws have been adopted in about 8 states or so now. And NMRC is working very hard. I work very closely with the MD of Nigerian Mortgage Finance Company. And they are driving strong advocacy with the states, to adopt the new mortgage foreclosure laws. I think when we get to a level that we have standardized underwriting standards, which is being applied across board, but at the end of the day, we also must remember that this economy has its own structural problems. Today I also sit as the chairman of the board of a mortgage bank, and I understand what is the cost of our funds, And of course, you cannot lend below your cost of funds plus your margin, So when everything is priced off the back of MPR, what do you get? I was looking at the chart last week of mortgage interest rates across Africa. It is mostly above 20s. And people don't understand that if you take a mortgage at 20%, that means that in 5 years, you have paid the capital value of your asset twice, or even 4.5 years. How do you cope with that? So until we also get the structural imbalance in the economy, right, and we are able to take deliberate steps to incentivize primary mortgage institutions to lend when Fashola was in Lagos, that was what Fashola did when he started home ownership mortgage scheme. The government underwrote part of the interest rate. That was why the fund was affordable by those who bought. That is the kind of deliberate steps that we need to take. And of course, look at Lagos State is giving further boost to homes now. A whole lot of new Lagos homes are now being commissioned by the state governor. So we also have to be deliberate in terms of retail financing, understanding that when you send people to go and collect mortgage loans on a commercial basis, you can't survive when you borrow at 20 or 25%. So when we deal with the structural imbalance also in the economy, I believe that we can begin to make some progress in respect of mortgages. Thank you.
Thank you very much. We're going to have a commercial. We're going to play a commercial, and I'm going to ask a couple of other questions before we bring this to a close. My colleague, please, Dipo, can we have that commercial, please? It's a very brief one, yes. Thank you. Audio, we can't hear you. We can't hear the commercial. You need to replay. Hello, we can't hear the commercial, Dipo.
Post-COVID-19. We have speakers from IFC in Washington. We have Ifeoma Ekeako from Standard Bank.
Can you please replay? Can you replay? Can you restart?
I'm the author of the book, The Law and Practice of Real Estate Investment Trust, with highlights of African real estate models. I'd like to see this opportunity to invite you to the public presentation of the book on the 31st of March, 2021. To herald the presentation, we're going to have a webinar on real estate, innovative financing solutions post-COVID-19. I have speakers from IFC in Washington. We have Ifeoma Ekeako from Standard Bank Group. We have Niya Deleye, Liberty Degrees in South Africa. Amelia Betty from Landmark Group. We have the CEO, Paul Owanibe. And of course, Jumoke Akinwumi of Aletia Capital will be moderating. where we'll be there with people from the industry to contribute to this very critical conversation post-COVID 2019. Join us, register for the webinar. The link is displayed below, and we'll see you on the 31st of March.
Thank you. Thank you very much. Mr. Ogunniran, you have written a book that is worth reading. Someone has said that if you want to leave a legacy, if you want to be remembered long after you're gone, it's either you live a life worth writing about, or you have written a book that is worth reading. You want to, just for a couple of 2 minutes, talk about this book and its presentation and the opportunities that this, have for the opening up of the space, Nigerian real estate. There are a couple of other questions. For example, I'm in a quandary. They keep telling us of deficit, housing deficit in Nigeria. All right. And then the recession came, and then the glut, and then the pandemic, and you're just wondering what is the what is the hope for an investor? I know you've been talking about this, but I would like you to say a little bit more. But first, on your book presentation that is coming and the webinar that is also preceding it, can you say a couple of things on that? We still have 1 or 2 questions before we close. Thank you.
Thank you. Thank you for giving this book this platform. But let me address the issue of the other point that you raised first around deficit, glut, and things like that. My view in real estate is that you must choose your investment carefully. You choose your investment carefully, you're not going to run into problems with your investment. When I started my business, the first project that we completed in Abuja, we completed February last year. And we commissioned February, I think 17 or 18. The pandemic started in March, and we went into lockdown. We sold everything during the lockdown. From the comfort of my home, by May I had finished selling, and I was wondering, maybe I should have done something much bigger, So you need to choose the right product, the right location, the right price. That is why I spoke about ego and emotion. You have to be brutal in your real estate. If you are doing for investment and you are deploying risk capital. For me, I'm deploying retirement funds and funds that people have given me, my friends, those who like what I'm doing. That is not the kind of fund you want to deploy anyhow. So choose your investment. I chose to play in the niche of first-time home buyers. In Lagos alone, the deficit in that category is almost 2 million units. All the developers in Lagos, I'm not sure we're doing 10,000 units per annum. So just imagine. So if you're able to just do 1,000 units, you'll be so successful. So I chose that segment because when we did a study of that segment, we found that young men, young families, they don't want to live very far. They want to live close to the cities. They don't want Aja or Sambutedu. They want to live either in Lekki Phase 1 or close to Lekki Phase 1. The analogy I always give is that they want to close at Quillops by 12 midnight, and they want to get to their houses in 5-10 minutes. But that category, they also don't mind smaller apartments. Like I say, they are ready to trade size for proximity. So we went into the market and we designed deliberately to speak to that market. And our first project in that category is 48 apartments, and the market was extremely receptive. Now we're trying to do something much bigger. We're trying to replicate all over Lagos now. So you need to choose your segments carefully, and you need to choose your location, your construction methodology, your timing, everything. And you need to get the market to trust you. All those who have bought from me in this my project, none of them, only one of them has visited the site because they trust us. You know, so once you build that pedigree and you bring the right product into this market, you are always going to succeed by the grace of God. And of course, you know, God is also behind me. I go with the favor of God, whatever I do. You know, so that is that about. Now, about the REIT book, you know, part of the challenge in this market is, number one, how do you access pension funds? Under pension fund regulations, pension funds are not allowed to invest in real estate directly. They can only invest in real estate vehicles. And real estate vehicles that you could have is either REITs, real estate investment trust, REICOs, real estate investment companies, and now SEC has said any other structure approved by SEC. But today, REITs and REICOs. Now, before, there was a major problem with REITs because of tax. Because when you have best practice for REITs is that you must avoid double taxation. You cannot tax at the entity level and tax at the unit holders level. But that was the situation in Nigeria. You tax at entity level, you tax, you know, that makes no sense of the yield of that investment. Now, happily, the Finance Act in 2019, Section 6 and Section 9, has introduced provisions now recognizing the pass-through status of REITs in Nigeria, you know. So the COVID lockdown provided me with the opportunity to write this book. So we have written a book. We have looked at the evolution of REITs from the US between 1960 to 1960. As a matter of fact, I had to go into congressional debates in the US to understand the nature of this asset class. I had to bring out all the congressional, just to understand what was going behind the mind, the underpinning of those who created this asset class. You know, and of course, established in the US, refined in the US. In 1969, went out of the US to Netherlands. Today, there are REITs in over 40 jurisdictions, you know. And over the years, the laws all over the world, they've decided what are the REIT variables, you know. So what I've done in this book is to look at the evolution and the growth, to look at the characteristics. I mean, I've created what I think is my own ordering, grouping and grouping model of REITs, you know. What I've done in this book, by the grace of God, you won't find any other REIT text, you know, to the glory of God, you know. And then I've looked at the legal framework in Nigeria. I've looked at structure and governance of REITs. I've looked at asset selection and management, because a REIT is as strong as the assets, as its underlying assets. So what are the due diligence? So I've created a due diligence checklist for REITs. And I've reviewed investor metrics. You know, because I was on roadshow for, I mean, you know, I was on roadshow every time. In an 8-year period, you know, I led my company through 5 capital raises. So I was always with investors, you know. So I've taken a look at what are investors' preferences. And I wrote a chapter on tax treatment. And that chapter, which was about the most difficult chapter, I did a peer review. I gave it to Wale Bayomi, head of tax advisory at KPMG. He reviewed, and we had our arguments, and of course, we settled. You know, so I have a chapter on tax treatment, and I have a chapter on African REIT models. So I've compared the 4 main REIT models in Africa: Nigeria, South Africa, Kenya, and Rwanda. I had to go to Kigali to go and study the system. You know, so I've undertaken a detailed comparison of the REIT variables in these 4 countries. And of course, I wrote the last chapter on what next for REIT legislation. You know, so I looked at sustainability, risk management, and of course, governance. Going to, you know, COVID-19 has taught us a whole lot of lessons. You know, and I've, you know, spent some time. That chapter I also gave to a younger brother, Professor Kola Akinsomi, who is a professor at the University of Wits in South Africa. He also peer reviewed that chapter for me. You know, because I also wanted to understand the impact of technology. You know, with the emergence of the biggest REITs in the world today are 4G and 5G REITs, you know. And even though they're in the US and Europe, they're going to happen here, and we all have to prepare for it, you know. So we are hosting a webinar for public presentation next week, Wednesday. I also thought that rather than just present the book, let's also do something a bit useful. So we've chosen the topic, innovative financing solutions post-COVID. You know, and I've brought people that have, I've spoken on this subject all over the world, you know. So I brought the Adeleye, who is the head of real estate finance for Standard Bank Group, is in South Africa. Amelia Betty, the CEO of Liberty. Liberty Degrees. Liberty is probably the biggest property owner in South Africa, the biggest REITs, you know. Of course, Paul, CEO of Landmark, is also speaking, and Jumoke Hakeem, you know. And there's a Nigerian in IFC in Washington. We also have sat together on a panel before, you know, Ifeoma, who also do the opening remarks, you know. And of course, after that, we'll present the book, you know, both virtually, you know, and you know, so that's the book, you know, and I hope that the book will open new vistas. Now I want to focus more on thought leadership, you know, and I think with this book we can create something more in that respect. So, but particularly thank you, Mr. Joe, for giving me this platform for the book.
It's great. Are we invited to, you know, to be part of this book, the webinar? Can we? I mean, is every participant here invited?
Everybody.
Thank you very much. Thank you for giving us the leverage. And I want to say congratulations on the writing of such a seminar work. And you know, people you can take down you can send the you know, webinar registration address so that people can take advantage of that. Thank you very much. We are going to close now. We're going to ask one or two questions and then we'll be done. What advice can you give a developer who wants to go into terrace duplexes at the quarter Lexi axis? Okay, what is the structure required of a first-time homeowner? That's Uche Nwosu. Then we have Dr. Abolomo, who has been on this platform as a distinguished speaker. Insightful presentation. Hakeem, you have done really well. Very proud of you. Keep it up. And then we have perhaps the last intervention. And the question is, Oluwatosin Oluyemi. Insightful presentation. Thank you, Sir Hakeem Ogunniran. That's a new one. What's your view about house rental system in Nigeria? Do you support monthly rental system, and why? As a real estate investor, can real estate investment thrive on a monthly rental income structure in Nigeria? And then we can then bring this to a close. Thank you very much, all the participants who have been here. It's been a very robust intellectual fecund session, and I'm sorry if we're not able to take your questions. I know that there are real estate gurus right here on this platform. But one thing I can say is that Mr. Ogunniran is a fantastic faculty and a man that we can always call upon, and you know, he will speak to us. So can you speak to those a few questions, and then we can then have just some 5 minutes for, if you like, what we call after party interaction. Thank you.
Okay, thank you once again, Mr. Joe. Terraces in Ikota. I think from the top of my head, Ikota is and please don't hold me bound by this advice, you know, but I think Ikota is a decent area for terraces, you know, but I won't do terraces wholly opportunistically. I won't be wholly opportunistic in whatever I do today. You see, because my advice to all developers, watch your asset conversion cycle. Your asset conversion cycle is very critical. You know, so when I'm doing a project that is a bit opportunistic, you know, I will start early. Before I get to the level of my approval, I've done all my marketing, and I'm very sure that I have started to build the critical mass of buyers. So I'm doing something in Mende, Maryland now, where we're going to site in another 2 months or so. But we started marketing, started pre-marketing like 3 months ago, you know. So by the time you are on site, you know, you are not doing this, it's not wholly opportunistic, you know, because the greatest frustration that a developer can meet is for you to start and nobody says, what are you doing there? like they say in my village, So I advise you to look at what is happening in that area. And then that helps you to position yourself better. Monthly rental, I think it's already happening. It's already happening in the commercial space, in retail. I can tell you for free. I mean, in my previous life, we built a mall, in Festival Mall. That was my project. And those days, we used to sign and collect 2-year leases. I'd done projects in these Lagos that a tenant, I had a tenant who had paid 5 billion rentals in advance, 3 billion rentals in advance. But those days are gone. Today, go and find out in many of the malls, they collect rent on a monthly basis, on quarterly basis, and we're getting there. But it's also very difficult for developers for so many reasons. It's a very difficult environment to operate. Costs are going through the roof. I'll give you an example. Before the lockdown, the enforcement was going for 140,000 naira per ton. As at March 2020. And then went into lockdown. By the time the lockdown was lifted in October, we went from 140 to 180 to 240. As at last week, reinforcement was 350,000 naira. That is crazy. That is simply crazy. But that's the market in which we are operating. So it's also difficult for developers. Difficult. Sometimes when you make a commitment and these things happen, you're also in trouble. And you struggle between defaulting, or ensuring that you just complete, just take a haircut or haircut on your margins. That is why it's always better to just go in quickly. Now, elections are coming. 2023. As a developer, your horizon should not be beyond June 2022. So if you're doing a project today, you have to ensure that by June 2022, your exposure is very minimal. Because from July 2022 till the end of the election is the way this comes every 4 years, we go through the same problem. So all those macro factors, you also have to take into account as a developer. And then when you then take decisions and God helps you, you will still survive and succeed. I'd like to thank you very much for coming. Thank my brother, Mr. Joe, for this platform, for this fantastic platform, and particularly for allowing me to, this is the best platform that has been given to my book. Thank you very much.
You are such a great gentleman. You are such a great intellectual. We're very, very grateful to have you. Ladies and gentlemen, you have heard everything, from Mr. Hakeem Ogunniran, an intellectual, an investor, an entrepreneur, a real estate mogul. Thank you very much for your time and for inviting us to your webinar as well as the book launch. I want to trust that it's a book that is not only worth reading, but also you're worth having. We have just about 5 minutes just to interact. You can unmute, you can say hello. I can't go through all the distinguished participants that have joined us today. I just want to say we appreciate you, great intellectuals. I like to single out Reverend Adegbeson, who for a couple of, he has always been with us in terms of support, but he couldn't come for one reason or the other. I'd like to welcome him. And, so let's have some, a time of interaction for about 5 minutes or so, and then we can call it a day for today. Thank you very much. Thank you. You can unmute, say hello to the speaker. You can say hello to a friend. It's also a water cooler discussion session. Also an opportunity to network and to interact. Thank you.
Reverend Ogunniran.
Sir.
God bless you, sir. Sir.
I don't compare you.
By God's grace, we will there at the webinar to come and see the good work. We always trust you. Thanks and God bless, sir.
Thank you, sir. Thank you, sir.
Reverend Ogunniran.
Yes, sir.
My name is Kehinde Oshibono.
Hey, my chair. Sorry, Reverend. Husband CJ.
They did not take my question. I sent a question to the platform. It was not taken. But we'll find out that one at another forum, because we have difficulties ejecting tenants in Lagos. And for people who are investing in properties, I think it is now becoming somehow a risk. So I was asking that, what's your advice? But maybe time does not permit now, we can meet on one-on-one to ask, because we have a lot of cases in court now to recover premises, and the courts are not functioning well in Lagos. So a lot of people are becoming discouraged. So we'll find out how to discuss that one later. Thank you very much.
Please,
Thank you for the lecture.
I will help Brother Ogunniran, Pastor Ogunniran collect the consultancy once you meet yourselves.
I apologize, please. I apologize.
Hakeem Ogunniran, congratulations. This is Fatinola Ajayi. Congratulations, Reverend Ogunniran.
My chair.
How are you?
That's my president, Fatinola Ajayi. Isaac Kasa.
Yes,
I could see.
Thank you very much.
Abimbola Adebaki. We both serve on Safe Medicines Foundation as trustees, doing a fantastic job. I could see my brother Niyala Wode. Maoga.
GSM.
Lusodo is there, Maoga is there.
Well done, sir. Great presentation. Our student, Ajoko Jeje and Kowinsileni Neo. God bless you, sir.
Yeah, Glasgow is mine.
Thank you. Glasgow.
So, our brother, God bless you for the presentation.
Thank you.
My name is Jet Van Colley. So nice to be part of it. God bless you.
Thank you. Thank you. You have all the big guys here. I can see Hakeem Opatola. These are all the people making all the in Lagos now. I can see Hakeem Opatola. I see all the big people.
Muted. I greet you, Mr. Ogunniran. Thank you for your presentation. Thank you, sir.
Yeah,
that was a great one. We're looking forward to Wednesday. Thank you, sir.
By God's grace, yes. Thank you. Thank you. By God's grace.
Yes, sir.
Okay, so ladies and gentlemen, once again, thank you very much for being a part of this intellectual feast and an opportunity to learn. And like I normally say, it's an opportunity not only to learn, but to leap as well as to lead. And what we are providing is a drive-through MBA for those who want to learn and connect learning to growth. Thank you very much. I want to say a big thank you to my colleagues at Touchstone, Dipo Ogundikwe, excuse me, Muyiwa Alabi, Buki Oluyemi, and others. I want to say thank you for making this possible every Saturday. Because of the holiday, because of a season, we're taking a break on next Saturday, and then we'll be back. We'll be back after the Easter season. Thank you, and enjoy the rest of the weekend. God bless you.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you, sir.
Bye-bye.
See you Wednesday. Thank you.
Thank
Bye.
you.
Bye, everyone.
Bye.
Thank you very much, sir.
Thank you. Festus and Michelle, thank you.
Thank you.
Okay, thank you, sir. Bye-bye, sir.
Thank you.
Thank you, sir.
Thank you. My reverend.
My chair. My
Thank
chair.
My chair.
Well done, Akusha.
Bless you. Thank you.